The South African Reserve Bank has kept the repurchase rate steady at 8.25%, leaving borrowing costs at 15-year highs. Governor Lesetja Kganyago has, however, warned that the risk highlighted last year are starting to materialize and could push inflation even higher. Newzroom Afrika's business reporter Ntokozo Khumalo filed this report for us.
Indebted consumers and businesses are breathing a huge sigh of relief after the Reserve Bank's Monetary Policy Committee kept the repo rate unchanged at 8.25% for a fifth consecutive meeting. This means the cost of borrowing will not increase for at least 3 more months. A move Alex Forbes, head of asset allocation, Mandisa Zavala, says the market expected.
They're a little bit on the jittery side when it comes to calling the end of inflation, because they are aware that there's a lot of upside risks that are still posing and still keeping inflation much higher than what they had expected. So it was expected by the market.
Those risks include climate change, which the SARB has warned about throughout 2023. But Kganyago has also sounded the alarm on the increase in food prices.
We are at a difficult juncture. Last year, food inflation hit the highest levels since 2008.
Zavala says while the central bank did not commit on an outlook on food price inflation, his strong words delivered the message.
They're going to be watching, they're going to be assessing whether or not it's sustainably an issue. But I think it's going to remain with us for a while. And that's where the conversation around inflation still being perhaps much more stickier for much longer than expected comes in.
ESG Analytics founder and managing director Sifiso Skenjana shares Zavala's sentiments that consumers should expect the prices of goods and services to remain higher for longer.
There was a revision of the PPI basket, and a lot more food items are going into the PPI basket. I think that's going to translate into a higher CPI number.
The central bank now forecasts inflation to ease towards the 4.5% target band in 2025, which could mean consumers should not expect a rate cut in 2024.
In the model and in our forecast, we say that CPI will get back to 4.5% by end of 2025, but lots can happen in between.
The SARB's next MPC and interest rate announcement is on May 30th, a day after the national elections. For Newzroom Afrika on Channel 405, I'm Ntokozo Khumalo in Pretoria.